Welcome back to the show. Today we're doing a deep dive into something that has become one of the most influential forces in modern crypto markets, but one that very few traditional analysts ever talk about. We're not looking at ETFs, institutions, or macro cycles. We're looking at something far more chaotic, far faster, and in many ways far more powerful than any of the usual suspects. We're looking at how online influencers, the biggest streamers, the loudest voices, the most viral personalities, have become a new financial force in crypto, whether they intend to or not. Because the truth is this: in 2025, influencers move markets. They don't do it through price calls or technical analysis. They do it through culture, through momentum, through massive digital audiences acting in synchrony, and through the ripple effects of streaming, memes, gambling moments, and real-time reaction cycles. And whether it's happening on Kick, TikTok, YouTube, X, or anywhere else, the impact these creators have on crypto has become so huge that analysts are now quietly tracking them the same way they track ETFs. Because we've entered a new kind of crypto market, one driven as much by personality as by fundamentals. And it's not about accusing anyone of manipulating anything. That's not what this deep dive is. This is about the influence economy. The way millions of people react to what their favorite creators are doing, what they're streaming, what they're saying, or even just what they're laughing at. The way communities behave, the way meme cycles explode, the way liquidity rushes into tokens, not because of news, but because of vibes. And if you ignore this side of the market, you miss at least half of what makes crypto move in the short term. To understand why this shift happened, you first need to look at how influencer culture changed. A decade ago, influencers were just people making videos. Today they're cultural engines, they're broadcasters, they're entertainers. They command audiences larger than some TV networks. And when these creators, whether it's someone like Adin, iShowSpeed, Kai Cenat, XQC, or dozens of others, do anything publicly with crypto, even casually, millions see it instantly. Not through press releases, not through analysis, through raw emotion and entertainment. And that's where the meme coin connection comes in, because meme coins, by design, are driven by the same energy that drives influencer culture: quick reactions, inside jokes, viral moments, flash trends. The market responds to humor, chaos, and momentum, the same things that streamers thrive on. So when a big creator reacts to a chart, shows a crypto balance, spins a gambling wheel that's funded in crypto, or even just jokes about a coin, the audience reacts not as investors, but as fans. They carry that energy into the market, and the market moves. You've probably seen it happen. A random clip goes viral on TikTok or X. A creator laughs about a coin or shows a number on stream, and suddenly liquidity floods into tokens no one was talking about 10 minutes earlier. Again, not because a creator said, "buy this," but because culture moved. Fans moved. People who treat crypto like entertainment moved. This is a different kind of market force. And honestly, it's one analysts are still trying to figure out how to measure. And if you want to understand why influential figures have become such major forces in meme coin cycles, you also need to understand their platforms. Kick, for example, has become one of the biggest environments where crypto interacts with streaming culture. Not in a promotional way, in a natural way. The platform openly works with crypto-based ecosystems through partnerships visible to everyone. And because so many big streamers broadcast there, their crypto-adjacent behavior, whether it's gambling with crypto balances, reacting to fast-moving numbers on a screen, or showing the emotional highs and lows of risk, is seen by millions. The audience feels the volatility, the adrenaline, the chaos. They see crypto as part of the entertainment, part of the stream, part of the culture. And when you blend entertainment with finance, you get something new. A market driven partly by emotion, partly by memes, partly by the behavior of huge audiences who all see the same thing at the same time. This isn't manipulation. This isn't even intentional influence. It's cultural influence that spills over into financial markets. And this brings us to Andrew Tate, because Tate is a completely different kind of influencer. One who speaks less through entertainment and more through ideology, philosophy, and strong polarizing opinions. And when someone like Tate makes a comment about Bitcoin, The effect isn't the same as when a streamer reacts to a chart on Kick. Tate moves sentiment. He influences how millions of people think about Bitcoin, not how they gamble with it or meme it. And this is where I want to give a quick shout out to a friend of the show, RR84, who brought this exact moment to our attention. They flagged Tate's recent comments, which turned out to be a major sentiment shock in parts of the online crypto community. Tate said publicly, "Bitcoin is going to $26,000. And whether you agree with him or not, that kind of statement hits differently when it comes from someone with his level of cultural reach. Traditional analysts might say something similar and barely cause a ripple. Tate says it, and suddenly TikTok is flooded with reaction videos, threads form on X, people debate whether he's right, and a slice of the retail market starts questioning whether a deeper leg down is coming. That's the power of influencer sentiment. Not price calls, but cultural weight. And when you combine all these different types of influence, the chaotic meme reactions, the gambling moments, the high-profile opinions, the live stream entertainment, and the ideological commentary, you get a new kind of market environment, one where meme coins rise and fall based on cultural waves, not economic fundamentals. One where liquidity moves because of viral clips, not institutional reports. One where audience culture is as powerful as technical analysis. And the key point is this: none of these creators are setting out to influence markets. They're not giving financial advice. They're not making predictions. They're doing what they always do: entertaining, reacting, expressing opinions. But the size of their audiences and the intensity of their communities create what analysts would call spillover effects. And those effects show up in meme coins first, because meme coins are pure culture wrapped in a chart. And with that foundation laid, let's take a quick break. And when we come back, we're going deeper. Because the second half of this story is where things really shift. We'll get into how these cultural reactions turn into liquidity waves, how meme coin seasons form around viral moments, how casino-based crypto economies push trading volume into specific corners of the market without naming any individual tokens, and why analysts are quietly starting to track influencer behavior as a legitimate market indicator. Stick with us, because this is where we go from understanding influence to understanding impact.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Shopify's point-of-sale system helps you sell at every stage of your business. Need a fast and secure way to take payments in person? We've got you covered. How about card readers you can rely on anywhere you sell?
Thanks. Have a good one.
Yep, that too. Want one place to manage all your online and in-person sales? That's kind of our thing. Wherever you sell, businesses that grow with Shopify. Sign up for your $1 a month trial at shopify.com/listen. Shopify.com/listen.
Welcome back. So now that we've talked about the cultural side, the reactions, the chaos, the sentiment shifts, let's explore the deeper mechanisms behind how influencer activity actually affects meme coin cycles and crypto trading patterns. Because while the cultural layer is emotional, the market layer is mechanical. There are actual reasons why meme coins respond so violently to influencer-driven moments. And the first one is liquidity fragmentation. Meme coins aren't like Bitcoin or Ethereum. Liquidity is thin. Trading depth is shallow. That means it doesn't take much for a rush of attention to move price. And when millions of viewers all see the same clip at the same time, even if only a tiny fraction of them trade, that's still tens of thousands of people acting in the same window of time. That's enough to push a meme coin up 200% in minutes. Not because someone promoted it, but because thousands of viewers acted emotionally, simultaneously, without coordination. It's the digital equivalent of a stadium full of people all standing at once. Not planned, just reactive. The second mechanism is what analysts call attention liquidity. This isn't capital, it's eyeballs. Meme coins survive on attention. When an influencer does something that generates massive traffic, Whether it's Tate making a bold statement or a streamer reacting to a chart, the attention spills over into the market. People start talking, people start searching, people start buying. They don't need deep analysis, they just need a reason to look. And once they're looking, the meme coin machine spins itself. The third mechanism is casino liquidity. And again, this doesn't require naming any particular token. But crypto-based casino ecosystems drive massive volume because of how fast the numbers move. When streamers gamble with crypto, the fast-paced nature of the gameplay creates a psychological connection in the audience between crypto and adrenaline. And adrenaline traders are the people who buy meme coins, not because they're told to, because their mindset is primed for high-volatility assets. The fourth mechanism is fan-base economics. Meme coins and fandoms share identical psychology. They both thrive on identity, inside jokes, memes, shared language, and tribal enthusiasm. When influencers joke about coins or the culture around them, fans treat projects like collectibles or fandom tokens. They're not investing, they're participating in a cultural moment. Even if the influencer never mentions a coin directly, their community fills in the blanks. And the final mechanism, the most important one, is speed. Analysts and institutions are slow. Influencers are instantaneous. A clip goes viral within seconds. A reaction reaches millions in real time. The market doesn't have time to digest. It reacts. Meme coins benefit from this because they are built for speed. They aren't weighed down by fundamentals. They don't need development updates. They move when attention moves. And that's why influencers unintentionally become market movers. They operate at the same tempo as meme coins. And this brings us back to Andrew Tate's comment. Because Tate doesn't move meme coins through entertainment. He moves Bitcoin sentiment through ideology. Tate saying, Bitcoin is going to $26,000 isn't a technical prediction. It's a statement of belief. And his audience responds to belief. When someone with his cultural impact expresses doubt, people feel it. They internalize it. Traders hesitate. Retail slows down. Fear spreads through the emotional layer of the market. It's the opposite side of the same influencer-driven coin. Streamers create hype. Ideological figures create caution. Andrew Tate also sits in a very unusual position compared to most influencers because he has been directly attached to a meme coin of his own, one that surged in popularity simply because of his cultural gravity. And again, we're not talking about wrongdoing or financial claims, we're talking about a purely cultural phenomenon. When his meme coin launched, it followed the same pattern as every major personality-driven token. Explosive early demand, rapid social media traction, and a huge wave of speculative trading, driven more by identity than fundamentals. People didn't buy it because they thought it was a technological breakthrough. They bought it because it was Tate-themed. It was culture wrapped in a chart. That coin went through the same life cycle we've seen across countless meme coins. It spiked on attention, it moved with sentiment, and it became a kind of digital badge for parts of his audience. And the most interesting part is that even during the volatility, its price movements were tied far more to Tate's public presence than to anything happening in the wider crypto market. If he trended on X, the coin moved. If he dropped a viral clip, the coin moved. If he disappeared from headlines, the volume faded. It became a clear example of how influencer-driven tokens function more like cultural instruments than investments. And this is exactly why Tate's comment about Bitcoin going to $26,000 hit the way it did. People assumed he must be basing that view on private conversations, insider sentiment, or market signals that aren't obvious to the average retail trader. But the more realistic explanation is much simpler. Tate's view reflects his belief system, not privileged information. He has always positioned himself as someone who questions mainstream optimism, challenges groupthink, and positions himself against whatever the dominant narrative is. So when he says, Bitcoin is going to $26,000, he's not revealing hidden intel. He's reinforcing his role as a contrarian voice. There's also the psychological angle. Tate knows his audience. He knows that if he expresses a strong opinion, people debate it intensely, and that debate amplifies him. It sparks discussions, reaction videos, breakdowns, and virality. The comment spreads not because people think he has insider data, but because he said it with confidence. and confidence, especially from a figure as polarizing as Tate, spreads faster than facts. Some traders genuinely take his caution as a warning. Others dismiss it as provocation. But either way, he shapes sentiment simply by having a stance. And the irony is that Tate having his own meme coin actually explains why he would make such a statement. Meme coins thrive on volatility, emotion, and narrative, not steady bullishness. A chaotic market is better for meme coins than a perfect one. Meme coins pump during fear as often as during greed. When the market is uncertain, people look for identity coins, cultural tokens, community-driven assets, things that feel alive even when Bitcoin is stagnant. So Tate's bearish take may not be rooted in malice or manipulation. It might simply reflect his understanding that chaos fuels culture, and culture fuels the tokens that orbit him. The market isn't driven by logic anymore. It's driven by attention. And attention is the currency influencers control more than anyone else. Thanks for listening to this deep dive. Follow the show, drop a 5-star rating, and send in your thoughts. And as always, we will see you at the top.